Welcome everyone to the CFO Swinger Watch Report technical analysis video for the week of December 2nd through 6th. Now, if you guys want to know the top-down approach to how we generate the following actionable swing trade ideas, make sure you guys read the entire report first before you watch this technical analysis video. The following research provided in this week's report is to be applied to the given trade ideas so that you can execute without much worry as long as you follow and act on the entire 3-point game plan to a T, which is also given to you in great detail. With that, let's get into the markets. So the S&P 500 ETF, or ticker symbol SPY, or the overall benchmark markets has given us yet again a new all-time high price print of $603.35. And this was achieved last Friday, which was a very short trading day. So just as a reminder, last week was a Thanksgiving holiday trading week, which basically consisted of only 3 full trading days: Monday, Tuesday, and Wednesday. Now, what was truly surprising for me personally was that we actually got some very good volume every single trading day for such a short trading week. And on top of all of that daily trading volume, we also got a pretty active options flow. And much of that options flow was pointing towards much more higher prices into the end of this year, specifically for the markets, but also for a lot of individual tickers that received a lot of that option flow. So we saw a lot of call flow, or a lot of call buying, and a lot of put sales as well. And that firmly leads us to believe that we should continue to move on up higher by the end of this year, and even possibly into the beginning of next fiscal year. Now, let's focus on what could occur this trading week, right? So we have the official stamp of approval from the markets that we should be staying over $600, this pivotal psychological whole number level of $600. And we have officially made a new higher high compared to the previous all-time high price print of $600.17, as shown here by this yellow arrow. Now, the one thing that I was truly concerned about last week, which was again a short trading week, was a potential formation of a double top. But with last Friday's close, that concern is now dissipated. Right? I'm not really too concerned about that anymore. But the only single thing that I am truly concerned about is the rise in volatility. Okay, so we're seeing the price ranges widening out over a short period of trading days. So personally for me, what I want to see for the next couple of weeks is a tightening of the price action here on the overall market. And I don't really care if the price decides to drop below 600 or stay above 600. All I want to see is a simple sideways price action for us to actually consolidate this huge range that we've suddenly made after the elections here, right? So from a bigger picture perspective though, right, on a weekly time frame, we are definitely in a textbook uptrend, higher highs and higher lows, and we're able to completely negate this rising macro wedge chart pattern. And we did break below it, right? We nearly confirmed this bearish chart pattern, but we snapped right back and we ended up breaking over it, over this ascending resistance trend line with a lot of volume and heavy amount of call buying as well. And we were able to negate this bearish chart pattern. And so if we are able to at least consolidate tightly around $600, then we can actually continue to catapult up higher into the end of this year. Now, if we were to see some type of correction, which I've been hinting at for the last 2 weeks, maybe in the middle of Q1 of 2025. All right, and if I say there's going to be a textbook correction, I'm looking for at least minimum a 10% drawdown from whatever highs that we have in the near-term future. So, for example, using last Friday's closing price of $602.55, okay? And if you go to negative 10%, and let's draw this all the way down, right? We end up hitting a very, very significant previous level of support, right? So we're sitting at $540 for a correction at our current price. And I want you guys to know this because I've also given you guys a put contract that I'm looking at specifically last week, right? I believe I gave it to you guys on either Wednesday or Tuesday, right before Thanksgiving in the private CFO Discord chat room. And I wanted you guys to really just focus on that specific contract, really just due to the fact that a 10% correction could potentially bring us right back to that 540 whole number level of heavy support. So that is kind of the reason why I gave you guys that specific contract with that specific expiration date. So if we do see some type of a textbook correction somewhere around, mid to late Q1 of next fiscal year of 2025, you guys should be focusing on that specific option contract, either as a hedge or as a short position for the overall market. Now, obviously, this is all speculation. So let's go back to the daily time frame. And all we need to focus on this week is that we continue to make higher highs, but we start to see signs of a potential tightening of the price action. And how do we see that? Well, through the overall declining of the average volume, which we're starting to see now with this this orange line here that is curling down, and with the lowering daily volume every single trading day. All right, so as long as we're able to see the daily 10, this red line here, and the daily 21 SMAs, this light blue line here, so both of these are my momentum SMAs, continuously rising up higher and supporting the price up higher, we should be seeing some very good consistent new all-time high price prints into the end of this year, but with a little bit more of tightening and sideways price action in between that higher high and higher low uptrend. Okay, so with that in mind, let's take a look at our first swing trade idea for this week. Okay, CLNE. Now, I don't know why it says ICLN, but that may have been the alcohol that I've had in Thanksgiving, during Thanksgiving Day. But this is CLNE, or Clean Energy Fuels Corporation. So just as a general summary of what this company does. Okay, this company basically is involved in the natural gas area of energy, of commodities, right? Specifically RNG, or renewable natural gas. And they're also involved with compressed natural gas, or CNG, and LNG, which is liquefied natural gas. And I've talked about natural gas a lot back in 2022, if you guys remember. And if you guys don't remember, make sure you guys go back to, I believe it was February of 2022's CFO Swinger Watch Report. It was one of them, right? You guys have 3 or 4 reports to look at in that month, so make sure you guys go through them and see which one it was. I apologize for not bringing the exact date, but you guys will find it, and it'll probably be a good idea to go back to one of the 3 or 4 reports in that month of 2022. So with the CLNE, we've seen a lot of natural gas seeing some great momentum for the last couple of weeks. And if you just take a look at even UNG, all right, this is the United States Natural Gas Fund, we've been seeing a lot of heavy volume and some very good bids coming into the UNG here. And obviously the price isn't really reflecting that, but with this amount of volume coming in, it kind of makes you wonder what's up, right? And so with with the CLNE, what really got me attracted for this one, for this week, is this very, very nice weekly base that I see here. And instead of continuously going down after reaching a high all the way back in 2021 here, okay, so we had a high of $19.79. This one has been making lower lows and lower highs since 2021, right? And so we're right back to the prices before we saw that explosive move up higher back in 2020. And with the price right back to the ranges that we saw back in 2019 all the way up to mid 2020 before that explosion in late 2020, the price has been able to find some sort of a floor here between $2.20-ish to around $3.35-ish cents. Okay, so that's kind of the range that I see here. Obviously, it's not perfect, but that is just my own subjective look and observation of this weekly time frame. Now, specifically, I am starting to see the price tightening up here as we move sideways. Now, in my own personal opinion, from a technical angle, I would love to see CLNE starting to tighten up even more here, because we're starting to see the price making a nice wedge chart pattern here. Now, we like to call this a bottoming wedge chart pattern. Why is it a bottoming wedge chart pattern? Well, because we are now basically stopping this huge downtrend that we've been on for the past 3+ years. And during this bottoming process, right, of moving sideways, we have begun to form this wedge chart pattern. So specifically, we're calling it a bottoming wedge chart pattern. And thus, with this bottoming wedge chart pattern, there is still the possibility of us breaking to the upside or to the downside because it is a neutral chart pattern. But since it is a bottoming wedge chart pattern, we will want to see a potential breakout to the upside and out of this descending resistance trend line to give us a nice new reversal and a new uptrend to the upside, right? Now, what I really like about this wedge chart pattern, or this bottoming wedge chart pattern, is that all of my major SMAs, so the weekly 10, the red, the weekly 21, the light blue, and the weekly 50, the dark blue SMAs, are all coiled up together. And they've been coiled up together for weeks, right? Since September here. And so at some point, I'm expecting a large break, or a make it or break it moment for CLNE out of this bottoming wedge chart pattern. And so as long as it's able to continue to tighten up and stay within the parameters set up by this bottoming wedge chart pattern, we should be able to see a nice breakout to the upside. Now, specifically, where should we be looking for this potential reversal breakout to the upside? Well, first of all, we do have the price a flat horizontal level and of resistance and support, or at least an upper range and a lower range levels here, as shown here at $3.25 as the upper range level of resistance and $2.75 at the lower range level of support. And with the price currently very, very wicky, right? I mean, every single one of these daily candlesticks are pretty wicky. There's a large wick at the top and a large wick at the bottom on some of these, like these ones right here. I mean, that's kind of the reasons why, one of the major factors as the reasons why I would love to see the price tightening up before we see a large breakout higher, because of this very, very wicky price action, right? And obviously the overall volatility of the price, even if it is currently making and consolidating within the parameters set up by this overall bottoming wedge chart pattern. And so for an official long entry point, I would love to see the price breaking over $3.25. And again, if we're able to retest this upper range level of resistance at $3.25, then most likely we will also be out of this descending resistance trend line, which is again a part of that overall macro bottoming wedge chart pattern. And so that will give us that extra confirmation that yes, the price does indeed want to break up higher, and we can finally see a pretty good trend to the upside, right? Without seeing all of these massive wicks at the bottom and massive wicks at the top. Okay, now as far as for the price targets and the stop losses, make sure you guys go to the report and read it, right? And I also give you guys a pretty good read on the actual option contracts that you guys should be looking at for this specific ticker. Okay, and last but not least, okay, let's take a look at SLB. Okay, so this, if you guys remember, this ticker was the sweetheart back in, I believe, back in 2022. So if you guys remember, in 2022, we had the overall bear market in the benchmark markets, right? The overall equity markets, right? And during that time, we only saw one single sector outperforming every other single sector out there. And that was the energy sector. And SLB was a very, very popular ticker to swing trade and day trade back in 2022. And if you see here, there's a lot of analysis that I did back in 2022 on this name because of the fact that this was such a popular name that was heavily involved with options as well. We saw a lot of options volume coming in and a lot of calls coming in at that as well. Now, what's interesting about SLB is that this ticker is now right back down to those specific 2022 prices. And that got me thinking, is there another opportunity here to grab for this name to the long side? And well, based on the current technical charts, there is an opportunity brewing for us to capture. All right, so first of all, let's go to the weekly time frame. So on the weekly time frame, the price is currently sitting at the weekly 200 SMA. And guess what? Back in 2022, we're able to break over the weekly 200 SMA back in January, right? At the very first month of 2022. And so far, we have been able to come back down and retest the weekly 200 SMA since that break over this weekly 200 SMA back in January of 2022. And so with this official retest, we've been able to stay over this major long-term SMA for weeks on end, right? All the way back into September of this year. And so what I really like about this weekly time frame is that the price is respecting and seeing some bids and some support buying coming in at this long-term 200 SMA. And so as the price continues to stay on top of this 200 SMA, I'm starting to see the price tightening up, specifically the last 4 weeks, including last week. And with this tightening price action, we're able to see that the weekly 10 SMA has finally been able to curl down and curl back up higher to support the price potentially back to the upside for a potential reversal to the upside. And for last week's close, the weekly 21 SMA has been able to catch up and do the same thing that the weekly 10 SMA has already achieved. And so as long as both of these two momentum, the short-term momentum SMAs, my 10 and my 21, are able to curl down and curl back up higher to support the price up higher, we should be able to see more long-term breakouts to the upside and more of a longevity to a potential reversal to the upside. Now, obviously, from a longer term and bigger picture perspective, right? From a weekly perspective, or even on a monthly perspective, okay? We're definitely in a downtrend, right? I mean, there's no doubt about that, right? Textbook definition of a downtrend is a lower high and lower low price trend, and that's exactly what we got. But even on the monthly time frame, right, we're also seeing a confluence of the larger SMA on a larger time frame, a higher time frame here, with the monthly 50 SMA, right? So the 50 SMA on the monthly time frame looks very similar to the weekly 200 SMA. And so with the larger time frame confluence of these two SMAs or indicators, we should be able to see even more support coming in for the longer term. Now, if I look at the monthly time frame, we're also seeing a potential, okay, descending channel here. All right, so we have this very long elongated trend line, right, of resistance, and also another descending elongated macro support trend line. And so as long as we're able to move tightly here within the parameters set up by these two descending trend lines, we should be able to see another large breakout higher from this descending overall bullish chart pattern, right? This descending channel chart pattern, and be able to see a breakout back to the upside for a potential mean reversion towards the monthly 10 and monthly 21 SMAs. Now, obviously, guys, from a technical standpoint, these short-term SMAs become a bit less significant as you go higher on the time frame. So on the monthly, I wouldn't be too focused about the 10 and 21, but on the weekly, okay, we should be focusing on all of these major SMAs like the weekly 10, weekly 21, and the weekly 200 SMAs. Okay, now from that longer term perspective, if you go back to the daily time frame, okay, we are seeing some very, very tight price action, which I really like to see here at this point in time as the price continues to try to perk up higher and potentially break out to the upside for another chance at a reversal from these 2022 prices. So the price has currently made a nice double bottom, right, on the daily time frame, a nice W chart pattern. I've kind of traced it out with my mouse cursor here if you guys didn't see it. And we have the first bottom to the left and then the second bottom to the right. Again, first bottom to the left, second bottom to the right, which creates that W chart pattern or double bottom chart pattern. And on the right side here, we have tightened up so well that it just seems like it wants to have a nice explosive move to the upside and have the daily 10 and the daily 21 SMAs to continue to curl up higher and support the price up higher for a potential breakout to the upside. Okay, now just as an overview for SLB, it's yet again another energy name, and you guys should know why I'm looking at energy names if you guys have read the report first. So again, if you guys are at this point in this video without reading the report, pause the video now and go back to the report and read the market summary. Okay, it gives you and explains to you why we are looking at two energy names for the swing trade ideas for this week. So SLB has been pretty successful with their vertical integration of their business, their main core business operations, right? And they've been able to basically achieve a status of being one of the world's largest providers of technology, right, and other services to the oil and gas sector. Okay, and so SLB again sees a lot of heavy volume every single day. I mean, even just the average daily volume right now is sitting at 11.3 million. So if we're able to get over that average daily volume on a potential breakout, then we can see a very good reversal to the upside. Now, specifically for a long-term entry point, I would love to see the price breaking over $45. So this horizontal level of resistance, and so far on the daily time frame, we're actually above that descending, that macro descending resistance trend line that makes up that macro monthly descending channel chart pattern that we saw a few minutes ago. And so if we're able to break over this 45 whole number resistance level with an entry point over $45.10, then we should see the next major level of resistance being hit at $46, which also is a perfect area for a retest because the 2022 prices are sitting somewhere around $41 and $46. So you can clearly see that the price has been consolidating pretty well in between this 5-point range. All right, and so again, if you guys want to take a look at the price targets, the stop losses, and the option contracts that you need to be looking at for this name, make sure you guys go to the report and read it from top to bottom thoroughly. All right, so that is it for this video. If this technical analysis video was very insightful, make sure you guys leave a like down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button. Now, you're watching this video now. Well, if you're watching this video when it just became public and you want to watch this video a day earlier when it's private, all you need to do is become a part of the many, many readers of the CFO Swinger Watch Report and become a member of the private CFO Discord. You can get 50% off for your first 30 days. It's a first come, first serve basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot. Again, my Insta handle is at ChartsFocus1. Good luck, and I'll see you all tomorrow morning.